about the numbers from here out. Now, Ashwini Agarwal is with us. He's founder and partner at Demeter Advisors. He's joining us now to take some questions. Ashwini, good to have you with us here. Thank you very much. You know,
morning,
the call for a tactical bounce, tactical rally is getting louder. I think we've got people like Goldman Sachs and CLSA and a few others coming out with these calls. We had Narain, S. Narain of ICICI Pru many weeks ago calling for the same. Now, he said nothing large, but I think it's time for a bit of a tactical move. What's your own sense, Ashwini, given where valuations are? We are now trading at 17 point something times FY24 earnings, around the 10-year average. Go on.
So thank you, Prashant, for asking me on your show. If you think about it, there has been a correction over the last 18 months in terms of time correction, and there's been a minor price correction as well, if you're looking at Nifty 50. As you correctly said, the valuations are now somewhere in the vicinity of 17.5 to 18 times. Long-term median, if you draw the charts over the last 20 years or so, are probably around 16.5. So we are still above the median, but not as expensive as we were 18 months ago when we were looking at valuations in the region of 21, 22 times. In addition to that, growth is reasonably resilient. It's, of course, slowing down a little bit compared to what one might have expected 12 months ago or 6 months ago, but it's still pretty robust. I mean, in the sense that fiscal 24 real GDP should be somewhere in the handle of 5.5% in my view, or maybe 6%, somewhere in that ballpark. Let's see how things evolve. And I think that's pretty healthy, given the challenges the world is facing. So a tactical bounce, or a relief rally as the world starts to look past the rate increases and hopefully there are no further banking accidents is probably what we are witnessing right now. But the noise from the Wall Street continues to be that banks are still fragile. The banking system is still fragile. There are a few banks out there where short positions are building up. So I just hope that this is not a replay of what we saw in 2008, where we saw bear stearns go under sometime in Feb, and the real problem hit us sometime in September, October. Obviously, I'm sure the regulators and the whole system is looking at the same risks, and I'm sure they're doing whatever they can, which is why I'm hoping that we've probably already seen the worst.
All right. Hi, Ashwini. Good morning. Let's hope that 2008 ghost has been put to rest. And I think in terms of positives, this time around, at least the central banks, they reacted very, very well. They were swift in terms of that reaction. I think that's heartening as well. But focusing on our own markets then, when you joined us last time, you told us you'd rather go with the dividend yielding stocks, some of them which offer some valuation comfort. And I think you were constructive on the telecom space as well. Well,
that's right.
You maintain that view, and anything else you're looking at positively?
So, Nigel, not much has changed in the last 1 month in terms of how I'm looking at things. I continue to believe that utilities which have a very solid dividend yield support, or many of the PSUs, is probably where one needs to be. You collect dividends of 5% as you go along, and hopefully if the stock price mirrors the earnings growth of 7, 8%, 9%, you'll end up with a 12, 13% total return, which is not a bad place to be. In terms of telecom, yes, of course, stocks haven't performed, but it's a duopoly. The business is growing. And I think, you are starting to see some green shoots in terms of, some players trying to take up prices selectively. 5G rollouts are happening in earnest. So I think, there might be some upside left there as well. And I'd also mentioned in the last time that banks and financials continue to be very attractive, with the provision that it's really very well owned and it's a consensus buy-in, which is what kind of worries me a little bit. Those continue to be the areas for favorite top-down investing.
Okay, so you're optimistic on it, but you're still worried about it. I mean, I take that point, right? Nobody wants to say the word, but 2008, but everyone's thinking about it. Hope that things don't pan out as they did way back in 2008. But, talking about financials, I mean, at least the updates that have come through for this quarter look pretty good, right, Ashwini? Given that we've had such a volatile global financial system, I mean, Bajaj Finance tracking at 20% loan growth, HDFC Bank seeing 20%. Of course, the question still remains how many of these are unsecured loans. So that is a bit of a worry. But in general, do you think that one should perhaps allocate more money to banks, NBFCs, because of how robust the performance has been this quarter?
Sonia, the sector is very well owned institutionally, both among foreigners as well as locals. But there is no denying that the sector is going through a really, really constructive earnings trajectory. Part of the reason also is that over the last 5 years, the sector has barely grown. There was a lot of cleanup that's taken place. The regulator has been very, very actively looking at where the risks might lie and has been very proactive in addressing the issues. So to that extent, the Indian banking system is significantly shielded from what's happening elsewhere in the world. It's also largely a domestic balance sheet, and the domestic corporate indebtedness or household indebtedness is nothing to worry about at this point. And like I mentioned, if your real growth is somewhere in the handle of 5.5% to 6%, and you add, let's say, a 4% WPI to it, you should see a nominal GDP growth of somewhere in the region of 10 or 11%. And with that kind of a growth, I don't think, we have problems at this point in time for the banking sector. So I think the outlook continues to be very positive insofar as earnings growth is concerned, operating leverage is concerned, credit costs are concerned. So it's a perfect scenario. So for the time being. And obviously, as somebody said, the seeds of the bad times are always sown in the good times. So we have to see when people start to get too cavalier in terms of risk management. But as of now, that's not the case.
All right. Ashwini, the other big sector that everyone's looking at is IT. I'm talking about IT, you had KPIT Technologies, one of those outperformers. In the last couple of sessions, it's lost close to around more than 10% of its market cap. In fact, as we were having this conversation, the stock was down 6%. Now it's recovered a little bit. It's down close to 2%. What's your view on IT? Will you be looking at it, say, if you have a 3-year perspective or thereabouts, will you be looking to get in? Because in the near term, there could be some headwinds, or will you avoid it for now?
Nigel, my view is that if you look at IT services in India, it's fairly well insulated in terms of sudden knee-jerk reaction on demand from their customers, because a lot of what Indian IT services provide are maintenance services, just efficiency gains, and the focus on them actually increases when things get tough. We saw that in 2020 as well. The problem going into this cycle for IT services companies is that the valuations were a little expensive, given how well IT services stocks had done over 2021 and first half or so of 2022. So valuations weren't cheap going into the cycle. So the correction that we saw over the last 12 months is actually quite welcome. I would say that, the time to sniff at the sector has come. Some of the valuations are starting to look interesting. And I would wait to see what TCS and Infosys say when they post their results in a few days from now. And, I think that would be the time when probably one should be entering if you were really trying to time it from a short-term perspective. But if you're looking at a 3-year trajectory, I think many of the IT services leaders should be able to grow revenues in high single digits very conservatively. Margins should be maintained, and therefore, they're good places to invest. The only caution I would make to this assessment is the outlook for the US dollar. US dollar has been turning quite weak, and in my personal opinion, I think the Fed's desire to raise rates is as much about inflation and cooling down the jobs market as well as protecting the US dollar. And the US dollar coming under pressure could be a bigger risk for the IT services companies than we can envisage right now. And that's the risk which I think the market is also worried about.
Okay, by the way, Bajaj Finance is really the stock of the moment now. 3% higher on that stock, post a good set of numbers that it has reported. And a lot of stocks in the broader markets are hitting fresh 52-week highs. Varun Beverages is one of them. Fresh 52-week high on that one. KEI Industries is another one that's looking pretty good. Ashwini, before we let you go, any thoughts on autos? It's kind of like split down the middle here, right? You have exports which continue to be very weak. Some pockets in domestic are improving, but the large narrative is that growth is slowing down in autos. Inquiries are slowing down even in fast-growing segments like SUVs. Would that concern you, and would you sort of take a step back on your auto investments?
Yes, Sonia, that's actually correct, because I think what's happening is that internationally things are not in a great shape. So any company that has a very large exposure to exports is something that one has to worry about. And in the domestic market, we are starting to see a slowdown. I think what's really happened is that 2022 saw a significant base effect where 2020 and 2021, there weren't many auto sales, and I think there was a lot of pent-up demand that came through in 2022. So extrapolating 22 into 23 is probably a mistake that some of us might have made in assessing the outlook for autos. So I think 23 is going to be a year of consolidation. I don't know if it's fully priced in yet. Domestics over exports, definitely. Heavy commercial vehicles over four-wheelers over two-wheelers would be the order of preference. But personally, I think, I prefer some of the component plays over mainline autos is how I'm looking at it.
Okay, Ashwini, we'll leave it at that. Thanks a lot for joining in and speaking to CNBC-TV18.